A couple more minutes and then we'll get started. This thing is moving so slow today. Okay, well, while this does whatever it does, let's walk through the practice questions. Number one, operating activities include cash inflows from sale of property, plant, and equipment? No. Sale of debt or equity investments? No. Dividends from equity investments? No. Collection of principal on loans to other entities? And the answer would be D. Sorry. Excuse me, it is not D. B, sale of debt or equity investments. Collection on principal of loans should be financing. Apologize. Okay. The first category of cash flows reported on the statement of cash flows is operating activities. So that would be letter B. Sorry. Dividends. Number one is C. My apologies again. The first step in preparing the statement of cash flows requires the use of information included in which of the comparative financial statements. So we're looking at either, we don't use the statement of cash flows to prepare the statement of cash flows. We do use the comparative balance sheets. We will use the income statement, but it's not comparative. And statement of retained earnings we'll use, but it's not comparative. So the answer is B. Zant Corporation had the following transactions occur in the current year: cash sale of inventory, sale of a delivery truck at book value, sale of Xanth common stock for cash, issuance of a note payable to a bank for cash, sale of security held as an available for sale investment, and a collection of a loan receivable. How many of the above items will appear as cash inflows from investing activities on the statement of cash flows? So cash sale of inventory is operating. Sale of a delivery truck at book value, assuming you use the truck for your operations and that wasn't your business, that would be the first one. Sale of Xanth common stock for cash would be financing. Issue a note payable to a bank for cash is financing. Sales of a security held as an available sale for investment would be one. And then collection of a loan receivable and you would not, that would be financing activity. So the answer here is 2 items. Oh, sorry. Go ahead. Yep. You need those? Okay. Which of the following would be classified as a financing activity on the statement of cash flows? Declaration and distribution of a stock dividend, payment of a bond payable, sale of a loan receivable, or payment of interest to a creditor. So we want financing activity. And so declaration and distribution of a stock dividend would not be because it's stock, right? Non-cash. Payment of a bond payable would be our answer. Now, just so you know, collection of a loan receivable can be one if that is part of investments. So you could make a note little there that says if part of investments. Okay. So our answers were C, B, B, D, and B. The next page, you get a little thank you from me. I appreciate you guys. Our chapter objectives. And you want to explain the statement of cash flows. And the cash flows report a company's cash inflows and outflows for the period. The statement of cash flows provides useful information about a company's ability to do the following. So we really want to figure out here what with our cash can we do? And so you want to know, can you generate cash from operations? That's why operations is first. Can you maintain and expand operating capacity? Can you meet financial obligations? Meaning, can we pay the debt we have? And then the last one would be pay dividends or purchase treasury stock. So what we're trying to do with the cash flow statement is we're trying to take the accruals out of it. Now, this is really important for finance folks because you guys use mostly cash related formulas. And so you need to know what kind of cash the company is generating. And so that's why there's a little brief activity about future cash flows towards the end of it. I think everybody's had time to get that down. Anybody else? Good. Okay. So the statement of cash flows reports cash flows, operating, investing, and finance activities. Also, you should make a little note here. Non-cash activities that are material are disclosed in the notes to the cash flow statement. Okay, cash flows from operating activities are cash flows from transactions that affect the net income of the company. And just note gains and losses are excluded. Give you a minute to get that down. I know it's a lot of writing. Cash flows from investing activities are the cash flows from transactions that affect investments and non-current assets of the company. Okay, and cash flows from financing activities are the cash flows from transactions that affect the debt and equity of the company. Sorry, I didn't mean to go down too soon on that. Okay, so we're going to talk about what are some of the cash inflows for the various activities. So for operating activities, cash inflows come from sale of products, and from providing services. Cash inflows from investing come from sale of investments, sale of property, plant, and equipment, and sale of intangibles. And then financing would be from issuing stock, from issuing notes or bonds payable, from a line of credit, and the last way would be from selling treasury shares. Now we're going to provide some examples of cash outflows. Did everybody have enough time? Now we're going to talk about what are some cash outflows. So for operating, you have to purchase inventory, to pay employees, to pay taxes, pay operating expenses. Investing would be to purchase investments, to purchase PP&E, property, plant, and equipment, to purchase intangibles. And then for financing activities, to pay dividends, to buy back treasury stock, to retire common or preferred stock, pay down principal on credit, note, or bond payable. And then make a little note here. Interest expense goes in operating. So come back over here, pay operating expenses, and record to pay interest expense. Once you get that down, if you've already got it down, you can flip the next page and you can start to look at practice number 1. You guys should be working on that. If you're worried about keeping your paper neat, just kind of write next to it on the left-hand side whether or not you think it's operating, financing, or investing based on the way we've talked about it before and you're reading from the chapter. I'll give you about 2 minutes. If you have any questions, please ask as I walk around. Bless you. Yeah, if you're not confident and you want to keep your paper clean, I understand, but just kind of put the initial next to the end of it. Okay, so let's go ahead and walk through these now. So the first one says paid 20 million to repurchase bonds. So this is not an investment activity. This is to repurchase our bonds. And so this type of activity would be financing. And it would be a cash outflow. Purchased a new building would be investing. And that would be an outflow. Sold services to customers would be operating. And this would be an inflow. Paid employee wages would be operating. And this would be an outflow. Paid interest on bonds would be operating. And this would be an outflow. Sold shares of stock from its portfolio, so investing. And this would be an inflow. Paid for merchandise inventory, operating. Outflow. And issued a note payable for 3 trucks. This is non-cash. Dividends were declared and paid. This is financing. And this is an outflow. Now keep in mind that it has to say that dividends were paid and they can't be stock dividends, because if they're just declared, they don't show up in the cash flows. Any questions? Okay. All right, let's take a look at preparing a statement of cash flows according to GAAP. So this first part, we're going to talk about the direct method, but we're not going to make calculations using the direct method. Your book moves that to the appendix. If you wanted to get a head start and you were planning on being an accountant in intermediate, you could look at example 2E, but it's not really worth the time. So we'll just talk about it. You have to know about the concepts for it. And so the first method is direct and the other method is indirect. Both are okay to use according to GAAP. And then just a little note, again, I'll keep reminding you, interest payments are reported in operating. No matter what method you use. And so if you were to do it, you would basically calculate your cash received from customers, your cash payment, your cash payments for employees, and you would just report all of these activities. The direct method is the easier to understand. It is the easier to prepare. The reason that most companies say they can't do it is they say they can't calculate these numbers easily through their systems, which is pretty much a lie nowadays. The reason that they do indirect is it's just kind of more confusing. And so they don't get as many questions about it. All right, so we're going to use what's called the indirect method. And the indirect method reports cash flows from operating activities by beginning with net income and adjusting it for revenues and expenses that do not involve the receipt or payment of cash. All right, so we're looking at everything that's kind of in net income, but we want to exclude the things that are non-cash. So it starts off and we'd have cash flows from or used in for operating activities. And then the first thing you start with is your net income. Okay. And now you have adjustments to reconcile net income to cash flows from operating activities. And so this is going to be kind of a guide for you to use for your problems. So I'm going to have, I broke out all the pieces separately. So you're going to add depreciation expense. If there are sales of PP&E, make sure you use that to help you figure out what your depreciation expense was if it's not given to you. Okay. You would add, excuse me, add amortization expense. And this would be from your intangibles if it wasn't given to you. You're going to add back any losses, like investments or sales of PP&E. And the last thing you would do would be deduct any gains, investment, or sales of PP&E. Okay, and then the next part is kind of confusing if you try to think about the logic of it too much, because it's a little bit weird. But essentially what they do now is they look at all the operating assets and liabilities. And they look at the changes of assets and liabilities and essentially say, was this a use of cash or was this a source of cash? So let's say something like inventory. If inventory increased, what's the presumption there? If the inventory account increases? Assets increase, right? But I mean, it's simply, we bought inventory, right? And so the assumption is that we paid cash for that inventory, right? Unless otherwise noted. And so if the inventory balance from the beginning of the period to the end of the period goes up, the assumption is we used cash to fund that inventory. If it goes down, then we assume that it became a source of cash. So you have to look at the operating accounts and you have to make adjustments for each change. And so you would add decreases in operating assets. You would deduct increases in operating assets. You would add increases in operating liabilities. You would deduct decreases in operating liabilities. You would add increases in taxes payable. Make sure to reconcile DTA or DTL. And then you would deduct decreases in taxes payable. And you have to remember to reconcile the DTA or DTL. So those are the only differences between the direct and the indirect method, is how you present your operating section of cash flow. So I think I've pulled up Apple's financial statements a few times, so let's go with that again. Okay, so in general, this is what a cash flow statement would look like. And you can see what method do they use. How can you tell quickly? Look at net income, right? So look at the two that you have now. The direct method doesn't start with net income. It starts with cash received from customers, right? So this one starts with net income, so it's indirect. And like I said, most companies use it, and it's pretty straightforward. Almost exactly what we did, right? So far, depreciation, they have share-based compensation expense. It's a little bit advanced for you guys. And then some other, and then they have changes in operating assets. When they have this net there, that means that they've also considered the allowance account beneath them. So you might see net on other accounts if they have contra accounts with them. But you can see, you know, the ones that are important, they break out: vendor, non-trade receivables, inventory, accounts payable, and other non-current liabilities. And so this is their cash flows from operations. All right, they call it cash generated. The wording, you just have to make sure if it goes up, you say it's from. If it goes down, used by activities. Let's take a look at example 1. We have cash flows used from operating activities, and we want to prepare the operating activities section of the statement of cash flows. And so how we would do this is we'd start with net income. And our net income is $396,200. And this would normally have depreciation expense that we'd have to add back. So we add depreciation. And so I'm going to put all these activities together, 61,250. And I'm going to take out the loss on disposal of equipment. And we have to add that, right? We add back that loss. And so that's 27,600. And then you have the change in operating accounts. And we're going to deduct increase in accounts receivable. And that number is 9,000. And we're going to add the increase in accounts payable. And that's $3,350. And so we total up these additions and changes. So we have 61,250 plus 27,600 minus 9,000. I did that wrong. 900 minus 9,000 plus 3,350. And I get 83,200. And so I add the 396 and the 83,200. And I get 479,400. 400. So that would be net cash flows from, from operating activities. And that's 479,400. Take a second to look it over, make sure you can see where the numbers are coming from. So when you go back in your notes, you have everything recorded. Okay. Let's take a look at example number 2 if there are no questions. Okay. So example number 2, Hulu Dewey. Guess they were trying to make our class fun for the day. Corporation's comparative balance sheet for current assets and liabilities were as follows. So this is telling us that it says adjust net income of 75,800 for changes in operating and assets and liabilities to arrive at net cash flow from operating activities. So we want to calculate the change, right? Sorry, this is a okay, so this looks like 5,000 difference. And remember, year 2 is the next year. So we want to make sure that we record it as an increase or decrease. So we have 51,650 minus 44,200. That equals 7,450, and that's also an increase. Accounts payable has gone up as well. Let's see, 8480 minus 5100. That's 3,380. And then dividends payable also went up. 9480 minus 6100. And that one went up 3,380 as well. Okay, so we're starting with our net income. And we have 75,800. And then we have the adjustment for changes to operating accounts. And so we have to deduct an increase in accounts receivable. And we said that was 5,000. We have to deduct an increase in inventory. And that we said was 7,450. And then we have to add the increase in accounts payable. And that's 3,380. And then we have dividends payable, but what does dividends payable tell us? Dividends payable impacts the cash paid for dividends, which is disclosed under financing activities. So that circle that or highlight it. It's why it's not used in this question. So we have 5,000 plus 7,450 minus 3,380, and we get a decrease of 9070. And so our net cash from operating activities would be 66,730. Any questions so far? Example 3. I left kind of these sections in there so you could fill out the information for number 3. And so try to decode what you can decode and fill in what you can. And then I will walk through it in about 2 minutes. If you have any questions, please ask me as I walk around. Okay, all right. So first one, net income. So it says the net income is 120,400. And then it says accumulated depreciation, furniture account increased by 8,400, while 3080 of patent amortization was recognized between balance sheet dates. There were no purchases or sales of depreciable or intangible assets during the year. So that helps us because it tells us the change is only related to what we recorded for the expense. So the depreciation expense is true, 8,400. And the amortization expense, 3,080, is included. And then we had a $4,480 loss from the sale of land that we have to add back. We didn't have any gains, and we had no adjustments for changes to the operating account. So we total these up. And we get 15,960. We add those totals together and I get 136,360. Any questions? Okay, let's talk about the investing section. So we said cash flows from investing activities show the cash flows from investments and PP and E. So you'll have the cash flows from used for investing activities. And we would add cash flows from sale of investments. We would add cash flows from sale of property, plant, and equipment. We would deduct cash flows from purchase of investments. And we would deduct cash outflows or cash flows for purchase of PP and E. And then you'd have your net cash from or used by investing activities. Okay. Now, before we jump to example 4, I'll let everybody take a peek at apples again. So it's pretty straightforward. Purchase of marketable securities, those would be their investments, proceeds from maturities of marketable securities, proceeds from sales of marketable securities, payments for acquisition of property, plant, and equipment, and then most big companies will have other because they have small things. But you can see all you got to do is measure the ins and outs. The tough part is when they sell property, plant, and equipment, we've got to account for accumulated depreciation as well. So we have to work backwards sometimes from the balance sheet. So example 4. Milo Corporation purchased land for $540,000. Later in the year, the company sold a different piece of land with a book value of $270,000 for $180,000. How are the effects of these transactions reported on the statement of cash flows? Okay, so in the operating, you would add back the loss on sale of land. and that would be 90,000. And how that's calculated is I took the 270 and I subtracted the 180,000. And that equals the 90,000. This is not part of the statement, by the way. This is just showing you the calculation. And then you would have investing activities. And you would have cash received from sale of land. And you'd have cash paid for purchase of land. And so your first one is the 180,000. And that's an inflow. And then the outflow would be 540,000 for the purchase of different land. And so you would have net cash used for investing activities and whatever the difference is there. So 270,000. Any questions? Okay, financing section. So you have the cash flows used from you buying for financing activities. Okay, and you would add cash inflows from sale of stock. You would add cash inflows from credit, notes, or bonds payable. You would deduct cash outflows for purchase of stock. Let's make that, let's say company stock, just so that it's not confused with investments. And then you would deduct cash outflows for payment of debt principal. And then you would deduct cash outflows for dividends paid. And then you'd have your net cash flows from used for financing activities. And keep in mind here, there's a little formula if you want to calculate the dividends paid. Dividends paid equals dividends declared plus the decrease in dividends payable minus the increase in dividends payable. That goes back to using that dividends account on the previous example. Example 3. Okay. There's also supplemental disclosures for cash flow. So companies want to know, or excuse me, investors and regulators want to know how much you paid for interest and how much you paid for income taxes. So those have to be disclosed separately. And then any of those non-cash investing and financing activities goes in just a little disclosure at the end. Okay. Any questions? Okay, so what you should do now is go to the back page of your handout. And you should carefully pull off that back page. And then once you do that, go back to page 6 and 7, or sorry, 7 and 8. Okay, so we've got these pieces separated for you, and so that you can look at them while we're going through them. We won't finish this problem today, but take a minute and walk through these two statements that you've got. You've got the balance sheet and the income statement. On the balance sheet, calculate the differences in our operating assets and operating liabilities account. So that would be on page 8. And I want you just to tell me the differences between, the years. So what was the change in cash? What was the change in accounts receivable? The change in inventory? The change in prepaid expenses? Is investments operating? Where do investments go? Come on, one of you has to get this. Where do I put investments? In investing, right? So that's not an operating account. All right. And then we have property, plant, and equipment. And then intangibles. So that's the only operating accounts that we have are accounts receivable, inventories, prepaid expense, and investments. But you want the change in cash because that tells you how much your change in cash flows were. And then for liabilities and stockholders' equity, we have accounts payable and accrued expenses. And then you have income taxes payable. Okay. So what was our change in cash? 44,450. Okay. What was our change in AR? 7,000, and it went down. Okay. Now keep in mind, this might not be the direct effect, right? When I put it into the income statement, I'm just recording the changes here. What was our change in inventories? Okay, so 11,300, 7,300. Okay. Change in prepaid expenses? $380. Okay. Change in accounts payable? So a decrease, you mean? 3,200. Okay. And then our change in accrued expenses payable? 1,500, and then change in tax payable. Looks like a decrease by 500. All right. All right, so we've only got 5 minutes left. We're gonna pick up here where we left off. And we have the group problem that is gonna be due on Thursday. It's gonna be worked on in class. And it's an important one, so you don't wanna miss it. And we'll pick up here on 12/5. Have a great day.